Hey everybody, super excited to be here, and the Honorable Raoul Pal. Great to have you here, and thank you for taking the time. I really appreciate, your support right from the beginning. You've always been a strong proponent of Truflation, and really, really one of the traditional macro investors that really sort of understood the importance of inflation and actually the need for reliable data in terms of being able to do the research and do the interpretation of where the markets are going and the importance of that. And hence, yeah, we're really happy to have you on here and be able to have this one-on-one time with you. So thanks
Not
for
at all.
taking
I'm
the
always
time out.
I've been a huge supporter. I mean, the weird thing about inflation is everybody's inflation rate is different.
Yeah.
But to have a source of truth, which is why when you guys came and said, look, you're doing this in blockchain, you're doing it from millions of prices, you're doing it in a open, understandable way. I'm like, yeah, this makes total sense, because it takes all the debate about what's the real inflation rate out. It's like, okay, this is a measure that is understandable. You can see what it is. It's recorded properly. There's no messing around. Even though everybody's inflation rate is different and whatever, so there's always arguments around inflation, but this feels like, okay, here's a source of truth.
Yeah, and that's really what we tried to do, right? We tried to take as much real time and take a developer approach, real time data as we could, as many sources as we possibly could for each item that we track, and then make that transparent and visible on the blockchain so that everybody can track it. And yeah, we've managed to actually, what's something that started off as maybe a bit of a pet project actually has really become a true business where we're actually really skilled at indexing real world assets. So that's really what we have found is a real niche. So not indexing blockchain transactions, but actually indexing real world assets and making that available on the blockchain with some really good
I don't
partners.
think you've even started your journey, because the world goes more of this way.
Yeah.
So sources of truth become one of the most important things. Blockchain allowed that.
Yeah.
So, if you think about the massive size of the monitoring of prices and indexation that occurs across assets, whether it's from S&P Global, market, all of those people, all of that will move to blockchain. Great.
Yeah.
And you guys were first.
Yeah. And that's sort of what we felt. I mean, and Chainlink's been a really big supporter in what we're doing. And as Sergey talks about quadrillions moving onto the blockchain, right? And so all the derivatives, all of these data sets or traditional finance products are going to move onto the blockchain. How do you see that? I mean, how is the blockchain's going to handle that? How quick is that going to happen, given your experience and exposure to all of these different traditional finance institutions and hedge funds?
That was the very reason I got into crypto in the first place back in 2013. I knew that we had to put all financial assets on the blockchain. Why did I get to that? After Lehman went bust and after the European banking system imploded, we learned one truth. We don't own anything. In a leveraged world, the collateral is what you fight over, but everyone's got a claim on the collateral. So nobody knows who the hell owns what. And as soon as I saw Bitcoin and understood what blockchain was, I wrote a piece about this, like the entire financial system will move to this. It has to. Now, what I also found out that even more concerning is when you get to the epicenter of collateral, which is DTCC and Euroclear, right? That's where everything clears, the entire world.
Yeah.
At DTCC and Euroclear level, they have one lender, which is the central bank. The collateral that is taken by the central bank is pooled collateral, which is both custom and house collateral. So there is no segregation at that level, which was why if Italy had gone bust or France had gone bust or anybody else, right, it was a complete, total wipeout.
Yeah.
And there is no segregation. So I'm like, holy shit, if this is the case, we need ownership. And so if I could find an asset that I could own myself, it could be removed from the financial system, put into the financial system, but still has my ownership on it. Okay, this is a game changer. So yeah, I've been down this track for a long time. It's surprised me how long it's taken. Because my first view is the big issue is derivatives.
Yeah.
right? There's 1.4 quadrillion of outstanding derivatives. When I was still at Goldman, we'd have kind of ISDA docs stuffed under desks and everywhere because there was so much activity, couldn't catch up. Now, a lot of that's been centralized, cleared now, but we've still got the same problem. Is there's 1.4 quadrillion dollars. These are basically unique contracts, they're NFTs.
Yeah.
And we have them in this pooled big mess of stuff. That needs to get sorted out.
And how do you see that? I mean, so if I look at that and you look at what's happening, so we've gone from having this pool of collateral that's been sort of centralized. We've then gone to, now we can have our own ownership associated with assets, right? Crypto and self-custody. And now sort of in a way, crypto's going back to, let's give custody again to somebody else and have that as ETFs. And then the banks are managing the custody, who have a third-party custodian. So we've created all these new middlemen that are actually coming in and taking on the custody role associated with the assets that you were historically or today still can own yourself.
Look, I think people will take the easy option. I don't store anything centralized.
Yeah.
But most people do.
Yeah.
It's a pain in the ass. Seed phrases, ledger devices, multi-sig wallets. I mean, this is not easy stuff.
Yeah.
People just want to go on, trade something and go and look at their account.
Yeah.
I get it. And we've failed to put together good centralized exchanges in crypto. We've got a few. I mean, Coinbase has done great.
Yeah.
Kraken has done pretty well. But a lot of them really, they were failure points again because we use leverage in a system that is a 70-vol asset, and that's a recipe for disaster. So what I think we've done, a lot of people say, well, we're moving away from the ideals of blockchain technology by putting this in the hands of the institutions. So I think, yeah, great. It pleases the financial institutions, but what it's actually doing, it's a Trojan horse.
Yeah.
It's us getting into their world, not them coming into our world. And before you know it, they start to understand what this is all about. And we don't expect them all to self-custody and stuff like that. What's nice is people like Bitwise will show on-chain what they own.
Yeah.
Right? That's a nice little subtle step towards moving towards, because if you remember the gold ETF, nobody for years believed the gold holdings.
Yeah, and still today, I mean, you look at, a lot of people, unless you're transparent, it's really hard for people to believe your holdings. I mean, look at Tether. People have been for 12 years now, people have been criticizing Tether. They're going to go bust any time now because they don't have the assets underlying the circulation of their stable coins. But yeah, that's interesting. Actually, I didn't know that about the gold, that everybody was questioning whether you actually had the gold as assets. Yeah.
Endless.
Yeah.
Things become
even if Price Waterhouse came in and did your attestation and said, "Oh no, it's there. We can certify that." Nobody.
Then they'll say, "Well, they didn't get Enron right. Why are they going to get this right?" Right? There's no end to this argument.
So
if you can see it on chain, it's verifiable, and it doesn't require a third party to verify it. That's the whole point.
Yeah. Which is, I think, one of the interesting things is seeing, you were talking about the collateral and everything and leverage, right? We've all leveraged, and fiat world has been actually much more capital efficient in the sense that you can leverage a lot more. You don't need to lock in 100% of your collateral to then borrow off that. But one of the things that I like is you have this statement, "Don't fuck it up," or "Don't fuck this up," right? Which, yeah.
And look, it's really important, right? So step back. This is the biggest macro trade of all time. It's the best performing asset class in all history in the shortest period of time, right? So you've got the gift. I don't want to hear anybody say we've been shut out, because everybody can put 10% in. Everybody, right? If you live in the Philippines or you live in Nigeria or you live in New York City, you can put 10% of your wages in, right? So this is an egalitarian, democratic, global, homogenous asset class.
Yeah.
And it's the biggest trending asset class of all time.
Yeah.
So given that, it's pretty easy. It's just buy it and hold it. But firstly, you have to deal with your own psychology. I'm down, I'm up, FOMO, my friend made 100x, all of this shit, right? You need to stop all of that. And then you need to not use leverage. Because if the game is to hold onto your tokens from $2 trillion to $10 trillion to $200 trillion when it's a full mature asset class, the game is to keep hold of your tokens. Don't give anybody an attack vector to take your tokens off you.
Yep.
Which is why if you can self-custody, better. Certainly don't borrow against it because somebody will take your tokens. It's just like, don't do dumb shit when given the biggest opportunity of all time. If the bloody asset class is going to go up another 100x from here, you honestly don't need to use leverage. You don't need to spend your whole time looking for the next 100x token and stick all your money and hopes and dreams in that. Just put 90% in the main asset classes and it'll do fine.
Yeah, I mean, you've seen that today, right? I mean, Solana went up I think within 2 hours, it hit a new, well, not all-time high, but it hit a high. Then 2 hours later, it's down at a low again before the previous low. So it's a constant shaking. And because the blockchain is so transparent, we also see how many loans are outstanding, how leveraged are people, right? And so investors, right? And so obviously people are going all bent out. How do you think the market, are these market makers coming in trying to rattle the market and unlock a lot of these assets, or what is?
I have no bloody idea. I mean, a bunch of it is degens, like, I'm just going to get a 5x leverage, whatever, get washed out. And most of them are not putting their life savings. They're just trading. There's also a bunch of hedge funds, short-term people. There's market makers. There's all sorts of participants. But actually, crypto markets aren't that deep.
Yeah.
What's also good is they're quite Austrian in how they work because, the creative destruction cycle is all the time there, right? Because the margin gets called immediately. There's no negotiation. It just gets called and you're stopped out and it's done.
Right. Yeah. It's
the only thing we get with it where it wrong was when there's hidden leverage. And I've learned this in the past is when you go around and ask everybody who's your biggest client, if it's all the same person, then you've got a problem. Particularly if they're using leverage. Long-term capital management was the classic example of that. I was on a stag weekend in Kilkenny, Ireland, and I was at NatWest at the time running the equity derivative desk. And a bunch of my friends were in equity derivatives and fixed income derivatives. And we were just having a few beers and the conversation comes up, who's your biggest client? Long-term capital. How much have you got? Oh, $1.5 billion in equity derivatives. I'm like, okay, what have you got? Oh, we've got, $1 billion. We had like $3 billion because clearly I was a better salesman. So obviously we had bigger positions. But then we went around. There's like, okay, we've got just between us lot on the boat, of which 4 or 5 people, we had maybe in equity derivatives alone, we probably had 5 times the value of the fund. I'm like, interesting. Then I spoke to a friend of mine who was the head of Bund trading at Deutsche Bank.
Yeah.
I'm like, how much you got? Goes, 50 billion. I'm like, holy shit. I went back to the risk manager on the Monday morning, hungover and tired, and said, listen, we've got to get out of this stuff. This is a disaster. But it happened again. It was actually 3 Arrows Capital. Yeah. None of us knew it. All of the CeFi projects had one client that was providing all the liquidity. And then when that client went, it all went. And we couldn't see that on chain. So that was the one thing.
But it was amazing. I mean, Luna, it all sort of trickled out with Luna, and then it went to FTX, then it went to 3 Arrows, or 3 Arrows, then FTX. It was really, we all made a lot of money on Luna and lost a lot of money as well. So it's like,
contrary to whatever anybody says, I was never involved in it. So I never really got involved in that madness. Yeah. But you can just see the tipping point. Also, there's something weird. One of the reasons I set up Exponential Age Asset Management, which is my asset management company, and it's a fund of funds that invest in crypto hedge funds, is one of the problems of this market is there's very little secondary market professional liquidity. We have a bunch of trading shops.
Yep.
That's it. The rest is retail investors. The hedge fund industry in the entire crypto space is $5 billion. In traditional markets, it's 5 trillion. So we just don't have depth of market. So if you think what happened with Luna, once you start teasing apart who was trying to spoof whom, who was trying to bankrupt whom, between Binance, FTX, Luna, Three Arrows,
Yeah, it's like,
you know, it's because there's not much capital in the space. So it's actually capital starved, which is great because it means the returns are very high, but not great because it means volatility is insane.
And then ultimately, does that mean we need more liquidity in the crypto markets? Or so it's just entering more institutional or liquid liquid capital, really, in essence.
Yeah,
Right?
and look, it will bring down returns over time, but we're a long way from that. We've only got $4 billion in a $2 trillion asset class, $5 billion in a $2 trillion asset class. You know, we don't need to worry about it for now. It's it'll just make the space better.
And I think you talk about it, right? The exponential age. And I think it's sort of, for me, it's the most exciting time to be alive, right? There's so many new innovations coming out. And I think the opportunity that crypto represents in terms of capital, wealth generation. We have that on the one hand. And one thing that always struck me is you've always talked about technology increasing the level of productivity whilst bringing down the unit cost per product that is being created, or GDP that's being created as a result out of that. And sort of you combine what crypto brings and all of that. I mean, how do you see that world evolving? And do you think we will be able to unleash the beast of opportunity represented by all these the exponential age, as you call it, right?
So how I'm thinking this through is, we talked about this is the biggest macro trade of all time. We're still in the middle of it. So great, focus. Yes, you should be involved in technology. You should be investing, if even just to learn, right? Because the biggest change to mankind and society is underway. And crypto is just a part of it. That's just like the transaction, storage, value layer of the internet. That's just a part of the whole story. The bigger things are AI, robotics, genetic science, what that all unlocks, and energy. And this formula that I talk about is the GDP formula. GDP formula is basically population growth plus productivity growth plus debt growth. Right? We stopped and blew up all debt growth in 2008. All debt growth now is just servicing of old debts. So really, the global economy, and particularly the developed world, has slowed down trend rate of GDP growth. Why? Because we've got an old, slow-growing population, and in many countries now shrinking. Italy, Japan, South Korea, Taiwan. I mean, they're all starting to shrink now. Okay, so you've got lower population growth supporting this large debt. So there's not enough money to pay for the debt, which is why the central banks print stuff. But over time, you need to change that equation. Because if not, we're not going to blow up, because for us to blow up, which is what everybody fears, the value of collateral has to go down a lot, which is what happened in 2008. But we've learned this new trick: debase the currency and optically the collateral goes up, right? You cannot go bust in that environment. Nice. Well, not on a societal level. So, okay, how the hell do we get out of this quagmire? Slow growth, aging population. And the answer is, well, firstly, population growth. But nobody wants to open immigration because wages haven't gone up in real terms. So the more immigrants, the less money there is to share in the economic pie. So people are like, no, we don't want that. So then comes AI. AI is infinite human knowledge. And it's going to get cheaper and cheaper and cheaper until it's water. So you scale knowledge at zero cost, which is the human brain, and above that, because that's where we're going. And then you've got the robots, which scales physical humans. So now we have infinite humans at an exponentially decreasing cost. What the fuck does that mean to GDP? Next, productivity. Productivity is basically the output per kilojoule of energy. If I look at UK electricity prices the last 50 years, they're pretty stable. Sure, they're cyclical, but they're pretty stable. So with EV technologies, geothermal, wind, all of the stuff that we're working on, we know that they don't scale enough yet, storage problems, other stuff, but we know they're going exponentially lower in price and they're rising in output. And then we've got nuclear and what we can do with nuclear technology. So we are going to halve and maybe halve again the cost of electricity in the next 10, 15 years. What is that going to do? Well, think of productivity. If technology goes down half, productivity's doubled. If it goes down half again, productivity's tripled. Yeah. So you're going to triple productivity while introducing infinite population. Okay. And again, I'm going to repeat because it's an important sentence. What the fuck does that mean?
Yeah.
Right. So I get to a problem that I get to 2030, and my job has always been to live in the future, and I can't see what this is. This to me is an economic singularity where maybe all understanding of economies and economics completely breaks down. Now, I may not be right. It may not be 2030, maybe 2035, maybe 2020. I don't care. The point being is we are fast approaching this point. Okay. Also, we've got to understand that as AGI comes, and honestly, I think OpenAI have got AGI. I think they are using it to build their business and their models and their everything, which is why 500 people can out-iterate everybody on Earth. Now, when everybody gets this, the speed of disruption is going to be like the meme coin cycle or the ICO cycle. What business lasts? Who gets disrupted by whom? How long do these disruptive cycles last? They could be hours, they could be days, they could be months, maybe a few years. We just don't know. We just don't know even what VC investing means in that environment. Do companies stay around long enough before they get disrupted? Or should they be tokenized so you can put money in and take money out on the time horizon that these businesses last? Because VC ain't going to work. What does it mean once we've got AGI? What does it mean for markets? Once we've got something that can pretty much process all of the data and all the understanding of markets and make investment decisions. What, is one person going to figure this out and become the richest person that ever lived? Or do they... people aren't thinking this stuff through. They keep talking about, well, it's going to replace jobs. They're missing the bigger picture. This is beyond our understanding of anything that we do. Okay, and it's wildly exciting and terrifying. We both agree. Yeah. So what I'm suggesting is you have 6 years to make as much money as you can because you have no understanding what the world is going to look like. And luckily, we've been given the gift of an opportunity, which is we can invest in technology, more so we can invest in crypto. But beyond that, I mean, what is an asset management business? What is this conversation? I'm already developing an AI that's my avatar that can speak. Well, in 3 years, I'm just going to put my avatar speaking to yours. I won't even be here.
And then you can speak in 15 different languages simultaneously as well, right? I mean, so yeah.
So what does anything mean?
I mean, the acceleration has really, I mean, crypto and has really accelerated, and the funding and the exit for investors, right? Which has made it, you know, in the past, it took, I think, 11 years or 7 years at least for any company to get IPO'd, right? And now it's gotten even longer and longer. In crypto, you could actually get out even before you actually built a product in 2017, at least. I mean, today you actually have to have something built and actually be somewhat substantive. And so that's allowed you to monetize and convert your intellectual capital into some sort of funding mechanism or raise money and be able to then grow the business. But a lot of the projects have now become treasury businesses versus actually, you know, continuing to actually innovate and disrupt the way they've been disrupting, which to me has been really interesting. And treasury, I mean, it's largely run by bots to a large extent, right?
It's also because money is actually hard to come by. And it's periodic. You know, there's tons of money, then there's no money. As everyone's just learned in 2022, 2023, is you could have the best business on earth and beg people and you cannot get money. So I think people are scarred, and so they keep this treasury as opposed to reinvesting it because people are so scared of the capital cycle. But this is to my point. The capital cycles are ferocious in crypto. They're quick. You can make a lot of capital. Then there's no capital. Then there's capital again. Businesses, this is real-time VC. So businesses fail, businesses grow, businesses stall out. It's all there in real time, played out in the drama of Twitter. And that's what it is. And people have to get used to that. And I think the world is going to look more like that, not less like that.
Yeah. So everything's going to move into this, mark to market a hell of a lot quicker. I mean, it's going to be ruthless, but it's going to be rewarding for if you come in at the right cycle. You need a bit of luck, you need a bit of hard work, all of those elements have to play together, and you can get, you can actually make a lot of money really quickly.
Well, I mean, all you have to do in crypto is one thing: adoption. Yeah. People have to adopt your technology, whether it's the underlying protocol layer or it's the application.
That's true.
That's all it is. You have one job, is to do that. And, a lot of people try to make complexity out of this space. If you are a blockchain, you have one job. Your one job is to sell block space. You're a block space salesman, and that's what you do. You're no different than a cloud compute person. We dress it up differently, but we sell block space, and we build applications on the block space. That's it.
Yeah, totally. I mean, and how do you see that in the fiat world then? I mean, if we're moving as fast as we do in crypto, and you have these super cycles that just go up and down, and the volatility's there. We've had this bubble of an economy around the US economy, the European economy, the UK, etc., right, that have built out these sustainable long-term growth cycles by printing a lot of money. Does that then blow up? We haven't had any real big waves since COVID, which really dropped us down, but that was artificially created. So how do you see that sort of?
I'm going to be slightly contentious here, and it's something I'm thinking through. So this is not a finished thought process, but I've been doing a lot of work on whether we can actually have a recession. Whether recessions are not rolling affairs within different parts of industry versus a proper recession. So if we look back after 2008, we didn't have one except COVID. We should have got one potentially in 2015 after the massive dollar rally, but we almost were certain to have had one in 2019. But the forward-looking indicators were picking up. As they are now, we haven't had our recession, but yet the forward-looking indicators are screaming higher. And it's making me, COVID was a shock, so that's different, right?
Yeah.
It makes me think, has the structure of the economy changed? Is something different now? Or is the use of the central bank balance sheet and liquidity changing the game too? I.e. the debt cycle doesn't ever really kick in because we don't allow it to. So I went back and looked at, there's one period of time that's actually very similar to this. It's the 1950s. People, it makes me laugh, the same inflation chart that they put on Twitter every time about the 1970s. Actually, it's the 1950s. It's so obvious. I think we even talked about this on the spaces we did a while ago. It's like the 1950s, everybody was in the military or kind of basically locked at home working in factories, whatever. They all come out, they all want to buy shit. The factories aren't ready for shit to be bought, and prices go up, right? Yeah. Inflation went up to 20%, and then it came down. And it came down to negative. And then it kind of had the rebounds for a bit. But what happened was all of these economies were saddled with massive debts, as we have been from the aging population, and that was from war that time. So what they did was financial repression. They did yield curve control. We're using the balance sheet. We might go to yield curve control. So you have financial repression, and then you basically wait for productivity growth to increase over time. So there was a lot of investment in future technology. If you think of the 50s, the washing machine, the car, the TV, every home has a TV, right? It was everybody huge
buying a home. Yeah,
that's right. And then eventually, as all of these people started to have kids, they all bought bigger houses, and then the kids and the inflation started. But that period, the stock market was exactly cyclical like now. Most of the debts had all been restructured in this 4 or 5 year time horizon. So we saw this perfect cycle that I call the everything code that we're running now. It was identical. The market screamed higher, bear market, scream higher, bear market, like clockwork, like this has been. Same as the crypto market. It's like, we've seen this before. It was the same problem, same outcome. And that time we got out of it from population growth and productivity growth. This time we're going to get out of it from population growth, but infinite, and productivity growth. So it's fascinating.
I mean, it's amazing how history just keeps repeating itself, right? The thing, I mean, obviously we've got huge amounts of debt. Debt's growing significantly. But one of the things that I look at, we're tracking Truflation. I mean, consumer price index. And actually, the CPI is useless. I mean, because all the assets are appreciating at significant velocity and at significant rate as well. And so all we're doing is tracking the foods, our cost of living, but that's tiny in contrast to everything else that's going on.
And this is really important, you see.
Yeah.
This is what's creating the anger and the populism. Because CPI and wages, they just don't really rise. Why? I mean, I was stupid enough to start an agricultural hedge fund back in 2007 thinking, hey, there's a new secular bull market. There's too many people. We're going to have to use all. I'm a moron.
A lot of food. Yeah.
Productivity just crushes it, right? And productivity and technology crushes prices over time.
Yep.
So our wages don't go up. And there's too many people. And then we have to compete in the WTO with China and everybody else.
Yeah.
But because of the mechanism we talked about, the savings, as people get older, their savings go into markets, and then debasement of currency. So you've got this bifurcation of what I'm spending my day-to-day wages on and assets. So assets are future deferred consumption. You buy an asset today so you can sell it in future to buy something with it, right? Future deferred consumption. Yep. And you want it to be worth more than it was today if you get it right, or at least the same in equivalent terms. But the problem is they're going up so you can buy less of them. Yep. So if you look at how much of a house you could buy 30 years ago versus today, it's like a third.
Yep.
And so that issue, that's why people don't understand inflation. They get all mixed up around these topics. It's like there's different types of inflation for different types of things. The affordability of assets is a massive problem. It's an even bigger problem if CPI inflation is low. It's a disaster.
Yeah.
But CPI inflation is a disaster when it goes up, like we saw. When it goes up too fast, because wages won't adjust.
And then it's I can't fill the table. I can't get the food on the table. And then it becomes people start getting edgy, right? Because then I can't go for the pub, have that beer. I can't have that meal. I get hungry.
Again, the difference is as asset prices rise, people feel like their future has been fucked. They know it.
Yep.
When CPI inflation rises faster than their wages, they know they've been fucked today, because they can't afford to do something, right? So there's two different levels of things. And when they both happen, then that's really, really difficult.
But what surprises me is the fact that people and the population in general are happy with, I don't want to say happy with inflation, but they want somebody to take care of them, right? I mean, I don't want to worry about my own custody of my own coins. I don't want to, I want to be able to on Friday night switch off at 6 o'clock or 5 o'clock or 3 o'clock, depending which country I'm in, and go to the pub and have drinks with my mates and not really worry about the next level of things and do my research and learn and study. It's like the pain threshold is very high.
But we created that.
How did we do that? How did we create
We created the need for a middleman. You're not the expert, trust the expert. Right? So we created it. So now it's like, I just give it to the experts. Who is this expert? Have you met any of these people? Right? But just give it to the expert. Yeah. So I think a lot of that changed in 2008. Occupy Wall Street taught that the experts are not experts, and they don't have your interests. They have their own interests. And so that was the rise of crypto. It was the rise of Occupy Wall Street. And then it went into all of the kind of GameStop saga, everything else is people taking control of their own finances. If you tell me, oh, I should have a 401k and I should invest in value stocks. Yeah, but I'm looking at technology and it's going up. Why am I not going to do that instead? Why are you trying to make me poor? Why are you taking fees away from me? All of this stuff.
Yeah, and that's to me the element. It's like, still we have a 401k. We still are forced to give it to the expert, right, through certain processes. And I'm getting a 3% yield on my pension that I've had to put 10% every single month. And who's managing that? Who's looking after that? Why is it only so low if inflation's higher than anyway? All these little things that just we seem to sort of be happy and content with, whereas no, I'm going to take my own finances into my own hand, right?
We've institutionalized the entire population. Now, in Europe, we institutionalized people in a certain way, which was private healthcare and welfare state. That was because we had 20% of some of our populations were injured after World War II, and you had to do something.
Okay. Yeah.
So that was the rise of the welfare state. And, it never went away. And, I'm a big proponent of the welfare state, but it's very expensive to run. And governments run businesses badly, right? So it always goes awry. But it does help because you've got some sort of safety net. In the US, you don't. So you become a bigger risk taker. US by culture as a risk-taking country. So there's different ways of skinning the cat, as it were. But we have basically taught anybody in the financial world that you shouldn't do it yourself. That you're too stupid to do it yourself.
Yeah,
you're going to mess it up yourself.
Yeah, don't fuck this up.
Yeah.
So it's like, how do we educate? So the whole education system is flawed in terms of, we need to educate you better to look after and continue to learn and adapt to the change that you're going to be, surrounded by.
So why don't we teach personal finance and investing at schools?
Yeah.
Because there's probably a lobby group that certainly doesn't want that to happen.
Okay.
Because what they want you to do is put it in their products and they will manage it. And Uncle Larry Fink or whoever it is will manage it for you.
But you were in the finance industry. You launched your own businesses. You're an entrepreneur. You have a whole team around you that that are working on products for you. And in a way, as a founder and with team members around you, you're also educating inside the company as well, and trying to build a framework that allows them to flourish. How do you balance that? It's like, and it's
the hardest thing I've ever done is become an entrepreneur. It's a miserable journey. It's like chewing broken glass while standing on the edge of a cliff, peering down on a windy day with it's awful. But it's also very rewarding as well, right? So, look,
it's funny. Who's the guy, Jensen from NVIDIA, who said, "I'd never do it if I were told to do. If I could do it again, I'd never do it." Right?
Yeah, exactly. It's so. Look, I'm very authentic, so I'm just me. So I'm the same person in the business as I am for friends with dinner, as I am when I meet a stranger, as I am on a podcast. And so, look, most of the people who work for me are much younger. They're earlier in their financial journey. And I've just tried to show them the way. It's like, listen, if we can help you, we can help more people. We can help people at scale. And it's great. Now I look at the internal Slack channel and people had no idea, that they were involved. They're like, oh my God, you've seen the price of Bitcoin today. I'm like, good. And they've been in for a while and they listened and they did the right thing. And they are learning. People do want to learn, and you have to treat people as intelligent. But also, I love that kind of the mid-curve meme, because it also gives you an ability to know that finance doesn't have to be overthought.
Yeah,
you don't have to be the genius in the middle that wows everybody with intellect. It's like, buy and hold is actually pretty good. It works pretty well. Now, if you understand why it works, okay, that's a superpower. You get to the other side of the curve eventually. But in the end, number go up in crypto is as powerful of meme as I've ever heard. You don't actually need to understand why. There's a bunch of really smart people that really spend their entire lives thinking about that. If you can see that, then you can. It's okay to not be the most knowledgeable person, but they've told you have to be the most knowledgeable to participate. That's not right. Now, to manage risk and stuff like that, you need to learn. But just to run basic investments, you don't need to learn a lot. You just need to listen.
And sometimes you just don't want to think, because if you overthink it, you're going to miss the whole crypto, the whole wave, right? I mean,
I missed a great one recently. It's a classic example of mid-curving it.
Yeah.
So I often like it when something launches or there's a really bad narrative about something.
Yeah.
But it's kind of big and important. Some intelligent people have thought it through. So it's like, okay, let's see what, we saw that with Tesla when everybody hated Tesla, it was going to go bust. We've seen it with many things, right? Facebook was the end of Facebook 2 years ago. Yeah, it went up 450% after that. So I start seeing Worldcoin and everyone's laughing at this orb and how it, and how, the thing was that, well, it takes a retina scan and they keep your documents and this is the evil power. So like I observe that. But I'm like, it's interesting, though, because they are trying to solve digital ID. And then I had started to think a lot about digital ID. I went on a lot of podcasts, talked to a lot of people. I'm like, this needs to get solved urgent. Yeah. And I'm looking around as the crypto AI and people saying, well, look at this, look at this. I had not even thought about WorldCoin properly. There's an event in Cayman and the WorldCoin Foundation's here. So, hey, Raoul, do you want to come along to our panel and, we're going to have a chat? And so I asked them a question. I said, why the stupid fucking launch with the orb? Well, why did you do that? It says, first, nobody will forget. But secondly, we just got it wrong. I said, what is the actual story of what you're trying to do?
Yeah.
And they were like, well, basically, Sam Altman said, well, I'm going to build AGI, and we need to know who the hell is human online. Or we're going to break society. I'm like, well, that is the most powerful story I've ever heard. Why didn't you lead with that? Anyway, I left the meeting and I'm like, well, I'm still not sure. Are they going to screw it up? Are they scaling it in the right way? Blah, 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 blah. And it was trading like at $1.50, and then it was up $8.50. And I'm like, I just mid-curved it. It was so obvious. I just totally mid-curved it and missed it.
Oh, interesting. Yeah, I'm just, how are they doing it? So you didn't go in, or it didn't?
No, I completely missed it. I walked away from the meeting thinking, you know what? I'm going to buy some of this. And then I thought, you know what? I don't know, because they're onboarding people in person and it's a bit slow. And, I don't know. And then I'll watch it for a bit. And then it just went, people suddenly understood the narrative. Sam Altman-like token solves problem. I'm like, oh, idiot.
Yeah, I never got, I thought it was too intrusive, sort of scanning my eyes and retina and sent.
Well, so what it does, so I learned out the truth of that. I learned the truth of that too. What it actually does, it doesn't store any of that. It just proves that you're a living human. So it looks at your retina, checks you're a living human, because you can actually replicate pulse and all this other stuff. So it just proves that you're a living human. And then it says, yep, this ID is a living human. That's it.
Okay.
They don't record it. They don't store it.
That didn't come across. That definitely didn't come across, right?
No, I know.
And this all happened around the time when we were talking about CBDCs. We were talking about, the Klaus Schwab taking over the world and logging everybody's identity. I need a health card. And so it's like, oh my God, and now somebody wants to scan my eyes and log this. Who, and he's speaking at the World
Economic Forum. We're doing that, but the ludicrousness is we're doing that like logging onto our iPhone with our eye. I mean, it's like, people are morons, right?
I know. It's like, really, yeah. It's just, I guess it's the principle, right? You can't support this guy. And yeah, it's so true, actually. Yeah. And actually, if it just does that, with robots coming out, as you talked about earlier, then actually we want something to verify he's not real. I'm the real Stefan. You're the real Raoul, and that's the robot over there, right?
That's right. And just online as well, just who's real, who's not, because then AIs can have their own passwords. Because look, if I'm right that basically these productive units, which is AI plus robots or just AI alone, are going to play a larger part of humanity. Well, they're going to get rights in the end.
Oh yeah, sheesh.
And so they're going to want, and we're going to play the whole racist card all over again. We're going to play the whole human bullshit all over again. Oh, well, that's an AI. Don't trust them. They're bad. And at this point, we're going to do all of the stuff that we do. But
I never thought about that.
First, we will give them the passport, which will be the black cross on their door. It's like, well, that's an AI. Don't trust them. We're going to play this all out again.
Actually, I never thought about that. Yeah, they're going to have rights, and they're going to be so knowledgeable with all our legal system because it's all been digitized. They're going to have all of that. They're going to have the AI engines act as their lawyers, and they're going to be brilliant at ensuring they have the right rights and appropriate rights, right?
Yeah,
how that plays out. I mean, that's fascinating.
In 30 years' time, we'll be going back, going, "What the hell just happened? We got manipulated by a bunch of AI to vote for AI rights. They've now taken over the world, and we're now watching them as they're making all the money."
So this is a personal question, Rob. Do you have children?
No.
No. Okay. Sheesh. It's like, what are the children going to do? I've like.
Well, everybody asks this question. I have a research service with a friend of mine, David Mattin, called the Exponentialist, which kind of sprang out of what we did for GMI. And the Exponentialist, we talk a lot about all of these changes in technology, but also try and think about this human side. What does it mean for my children? Is the single most asked question. What I do know about children, depending how young they are so adaptive. So they will find they're digitally native anyway, right? None of this scares them. They're used to operating in a game with an AI versus a human. None of this freaks them out. I actually feel sorry for the 18-year-olds, 19-year-olds. Okay. You go to university, by the time you come out of the university, the world's changed.
Yeah.
It's that's pretty hard because I think we're going to struggle for a little bit to figure out what it is we do. So that kind of group, the kind of, I guess, 18 to 22 group, they're going to struggle because they're going to feel a little bit like the millennials because they all finished school in 2008. They finished school in 2001, which was the
period,
Twin Towers.
Yeah.
Then they were at university and graduated after the financial crisis. They've seen nothing but these things and they're scarred by them.
Yeah, it's going to be, I mean, I do think, there's obviously resilience and we are by nature we have this drive to survive, right? I do feel that we tend to want to break through that. How do you feel another element, right? So on the one hand, you have all of that backlash and that capability. How do you deal with these tools? And then on the flip side, I felt, you also have different backgrounds, right? You've moved around the world. You've lived in different parts of the world. You've traveled the world. Do you think being sort of an immigrant and being constantly moving with having to adapt to new environments and dealing with different types of cultures has helped you get to where you are today in a way?
I think it's the single most powerful thing. It's the best education for anybody.
Yeah.
Is, the people who have a strong opinion about other people are generally those who haven't traveled.
Yeah.
The more you travel, the more accepting you are, the more understanding you are, the broader minded you become, the more ability to see the bigger picture, to see opportunities, the more flexible you are. As long as you don't do it to keep running away, and there's a lot of people who do that, they just keep traveling. But really, go and see the magnificence and the ugliness of the world.
Yeah.
And it will completely change your value proposition as a human to society. You just become a better human. It's as simple as that. So yes, it's really helped me, and I think it will continue to help everybody because, as we go through this transition, some societies will be faster to adopt it. Japanese societies dealt with an aging population. Go there. Go and see what's going on. How are they dealing with this? Japanese kids are dating AIs. We might think this is weird, but they've been doing that for a decade and a half now. And these are very basic AIs. these are machine learning kind of thing. Well, wait till you put proper AI. What is going to happen? I don't know, but sitting at home, you're never going to see it. What you have to do is just go and meet people and figure it out.
Yeah, I remember the Tamagotchi pets. I don't know. Yeah, I remember those, and everybody wanted their own pet.
So digital pets. Now, is that going to go away? I very much doubt it.
Yeah, amazing. I mean, yeah, it's like, yeah, I mean, fascinating. So, Raoul, I mean, amazing. I've taken up a lot of your time, but you've opened up a lot of my.
Yeah, I can see your head spinning a bit.
But yeah, no, I love it. I mean, it's like that's why you're at where you're at, and yeah, I'm fascinated. I mean, but like you said, as an entrepreneur, you're just in there. You're constantly building and developing and focused on very much your sphere. But yeah, I really, the whole element around rights for robots and AI. I mean, that's going to be, to me, that's a game changer.
It was amazing. And nobody saw it. There was a BBC show called Humans.
Yeah.
And it was like, imagine if the Tesla robots were advanced enough that they were what we would have presumed was AI, not AGI. So they were working in your house, looked like the Tesla robots.
Yep.
But then they had started to gain cognizance of the world around them and proper intelligence. But they had to hide it because humans would start persecuting them if they found out. But they end up mating with humans too. And the show is brilliant because it takes you through all of these questions, and it looks at it from every side.
Yeah.
And it's the understanding, the racism and how we want to go out and kill the robots, and then how the robots are more powerful than us and how fearful we will be. And it all was in that. It was like, oh my God, this is so clever. So I keep referring to that. It's definitely worth watching. Humans. It used to be on Netflix.
Yeah, I'll definitely track that down. I mean, the fear you could have is the sort of the whole world of the Terminator, right? So all of a sudden robots take over, we become rebellious, and there's this constant battle between the robots and the humans. And
just be nice every time you talk to ChatGPT. Just say please and thank you. Yeah. I'm kind of not kidding. I'm kind of not kidding. And that's, Mo Gaudat, who wrote the book Scary Smart, kind of said the same thing. Is like, we are training a child.
Yeah.
We're training a child.
But if you think about it, you've opened it up to the world. Not everybody's going to be nice. A lot of people are going to be harsh, right? They're not going to have a sense of humor. They're going to, yeah.
No. So, the more of us who are nice to the technology, I know it sounds ridiculous. And people say, yeah, but it's not smart yet. But this is where it learns. This is the very early stage. It's like saying a baby. A baby's stupid. No, a baby's just early form intelligence that ends up growing into Einstein. So just people have got to realize, don't look at the world in a static state. It's not.
Yeah, I mean, and I think everything if you add a lot of what we talked about here, right? It's like really, the new opportunities, energy, right? I think the unit cost coming down of energy, the more energy is being produced, we're creating nuclear, is only going to feed the production of more and more AI, right? Because
it's a flywheel.
It's flywheel.
Compute. It's compute plus AI plus energy. That flywheel just gets faster and faster and faster.
And yeah, I guess
the cheaper energy is the more compute you can make. The more compute, the more AI. The more AI, the cheaper energy will get because the AI will solve for the energy. And this thing, I mean, it's ridiculous. It's ridiculous.
And it was funny because I was watching a Bosch. I think Elon was on a Bosch at a seminar at Bosch, the big energy company in Germany. And they were talking about transformers for transformers for transformers in order to break down the energy requirement needed to feed the AI machines to then go and supply the actual consumer electronics tools that we needed, right? So I need all these little breakdowns and steps in order to make that happen. And in a data center, I remember when data centers first came out, rack space, they were brilliant. Why? Because they put the air conditioners in the racks themselves so they could cool better and increase the efficiency of utility of energy, right? And so it was like, I mean, the whole set of innovation that's going to come around that flywheel, that's going to really dictate.
Don't forget, and you'll have AI making the innovation. You'll
Oh yeah,
ask the AI.
yeah. What do we do?
Make as much money as you can as fast as you can. I'm telling you this. I don't know the answer. I don't know the answer. I don't know what the economy looks like. Do you tax the robots? Yeah, sure. Why would you not? If they're productive units, they're people essentially.
Yeah.
Not people in the societal, but in terms of means of production. So why would you not tax them? Then you've got infinite people being taxed for a smaller human population until the robots demand their share of taxes, and they throw your tea into the harbour, and it all starts again.
There you go. I mean, let's make as much money as we possibly can and put ourselves out of that.
That's what I got to.
Because it's a constant. It's just that the further down the path you go, it's inevitable. I mean, we've unleashed the beast. The beast is out there. We're not going to slow it down. No matter what regulatory burdens you put in place, you're just not going to slow it down. This is, yeah, it's just, we are also as humans competitive. And so we're going to want to try and make it faster and better on our terms.
Yeah, and look, if people are interested in this, as I said, I have a research service called the Exponentialist. Go to realvision.com/future. It is really fascinating because this is all we talk about. There is a portfolio of stocks to invest in, all that stuff. But it's this conversation, I think it's the most important conversation on earth.
Yep.
And people aren't really having it properly yet. Some technologists are, but most people aren't really understanding what the hell this really means. And it's of an order of magnitude bigger than anything humanity's ever dealt with.
And then we're worried about microcosms of little things that actually it's irrelevant. Why are we actually even worried about this when we've got such bigger issues to tackle?
Yeah.
And it's foundational. I mean, the issues that we need to tackle are foundational.
Yeah, but we don't have the politicians. We don't have the age group. No. We don't have the infrastructure. We don't have any of the ability to deal with this.
That makes it sound like a total losing proposition.
Well, it's going to be for a bit until we change the power construct of the global institutions, the rules-based global order system, how it operates, and the infrastructure that we use. We're just not ready for a technology age. We've taken it as far as it can, but we're just not ready, and we're going to have to learn a different way. And that's going to require younger people.
And is that just, we're going to have younger people coming into the the regulatory environment, into, all of our governments? Is it going to be a breaking down of all of the institutions to get it much more local, where we can impact and drive and change local? Is it going to be, what is it going, is it going to be, the network state, as Balaji calls it?
I think it's a bit of everything. I think the network state is correct. Yeah. I think, we already live digitally online in different network states, and we live in a physical place. I think we have to acknowledge that. I think you have the rights to move from state to state, but in the same way that we do anyway. I don't know how we deal with the regulation of technology. I don't know. Does some brave nation just say, fuck it, we're just going to ask the AGI to write our laws?
Well, that's going to happen. Somebody's going to do that. Yeah, for sure. Sure.
The answer is I don't know, but somebody needs to make bigger, broader decisions about where the world is going. And I think that we will see better decision making from Singapore, the Middle East, and places with benign dictators.
Yep.
Versus democratic people, governments with aging populations. What is their job? To keep that large old population happy. Yeah. What is not their job? To appease the young people who want change.
Yeah. But you do need to balance that. I mean, I fear, I've been traveling around the world. I was born in Hong Kong. I've lived in the US. I've lived in, Tokyo. I've lived in Hong Kong, in China, in Beijing for 5 years, in Europe. And I find across the world that, in Europe, the brain drain. In the US, we've had a huge brain drain, and it's all moving to Asia. A lot of it's going to Asia, the Middle East. You're seeing a lot of talent there, new opportunities, hope the opportunity to create wealth, participate in wealth. And to me, that's in order to stay relevant, you need to create hope in order to keep talent, right? And otherwise you just, you become old people's home, right? I mean,
Europe is an old people's home.
Yeah.
And it's a shame. It's a beautiful place. It's very nice, high quality of life. Terrible for opportunity.
Yeah.
I mean, they basically hate entrepreneurs.
Yeah.
For starters. They don't believe in success. After 2 world wars, I understand why. You know, they're driven by, a collective memory of that nothing good can happen. So, I've always said this is Europeans are, this is an options term. Europeans are call spread buyers. They believe in a capped upside, and Americans are call buyers, as are Asians.
Yeah, it's all or nothing, right? I mean, the Asians, you have the sort of super conservative. It's a marathon. I'm going to save. I'm going to DCA right? all the time.
Japan is definitely, Japan is definitely a call spread buyer, but the call buyers.
And then there's all or nothing. I'm just going full out, and it's just going to go balls to the wall. I'm going to give it 100,000%. And go.
Taiwan has no rights to be the global center of semiconductor. Somebody took profound risks and with stupid ambition, right? Ludicrous ambition. We're a small island in the middle of the South China Sea, and we have no real advantages, and we're going to turn this into the world center of compute. Amazing.
I mean, that's amazing, right? I mean, that's really a success story, and just that ability to do so. And by the way, a lot of their manufacturing is actually happening in China itself. So they don't actually do them, and they just keep the brains there, and they know how to balance the parachutes. Anyway, it's mind-blowing. Yeah, really, really fun, man. Thanks, Raoul. I loved it, man.
It was a fun conversation. Very much enjoyed it.
Very, very different to what I was thinking we might talk about. But
I told you not to come with a plan.
You did, and we did that. It's like, it's funny. I was thinking, it's like I saw you did an interview with Dan Tapiero a while back, and I swim a lot, and so does Dan, as you know, right? And so he came to Hong Kong. I was at Bitcoin.com. I didn't know who this guy was. It's like some gold trader, and we were training together. And then it turns out that he got into Bitcoin, and and then I saw him on your podcast. So it was like really interesting, fun.
Yeah, I got him in. I got a lot.
Yeah, I know. He told me that at the end. And I met him at Consensus in Austin, and we caught up and talked about swimming, and then ultimately Bitcoin. And you got him into it. That's small world.
Great.
But super fun. Thank you very much. I know I've taken up a lot of your time, but really loved it. Love to do it again at some point in the future as well. I really. Yeah, I mean, I'm going to see where this takes me and how this impacts my thinking process. And I'm going to check out the Exponentialist research and
look at... And people watching this, obviously go to realvision.com and it's free. There's all of this kind of content. We've got some amazing stuff there. So just go there and use it. It's built for you and it's free.
And you have this, actually, the research, you have a whole marketplace of analysts that are there. So anybody
third-party
can
research all in one place.
Yeah, all in one place. So realvision.com, I think it's marketplace or what?
Yeah,
I can't remember.
/marketplace. But just sign up for realvision.com. You'll see the marketplace. It's all there. And the Exponentialists, have a read. There's a landing page, tell you all about it, because it is a fascinating world and I love it.
Yeah, and I think you also need to, I mean, the important thing, I think, is just also take time out to talk about these things and sort of, work through it. And we don't always have that time. I just somehow,
That's the best thing about interviewing people. I get to choose the person's brain I want to pick. And so you get to absorb, so much.
Yeah.
And it helps you join the dots. It's great.
Yeah. Thank
Cool.
you.
All right, Stefan. Good to see you.
Likewise, Raoul. Bye-bye.